Hey everyone, welcome to Finance with Nishan. Ivattu will be discussing an interesting topic. But before we dive in, I want you all to imagine a chart that cuts through all of this confusing candles, no wicks, no time-based chaos. How would that be? Just imagine. It would be amazing, right? Well, that is what we are going to learn today. And the name of that chart is called as Renko charts. So by the end of this video, you'll understand what Renko charts are, how they are generated, what is the difference between Renko charts and other chart types, and then be able to trade using Renko charts. So not wasting any time, let's dive in. So before we dive in, let us try and understand how this originated in the first place, right? So this particular chart type originated from Japan. This was used by the traders there for trading rice futures. And then this was introduced by Steve Neeson's in the book Beyond Candlesticks in 1990 to the West. And since then, this has been an extremely popular and effective charting method for users around the world. Okay, so ಇವಾಗ ನಾವೇನ್ ನೋಡ್ತಿದೀವಿ, this is what we call as Renko charts. So here if you see, it is not like the standard candles or Haikinashi that we looked at. This is more of bricks in nature, right? So even the name Renko in Japanese means Renga, which in return means bricks. Okay, so these are how Renko charts are plotted. Now that we have looked at how Renko chart looks, let us try and understand the anatomy behind it. Okay, so what you are seeing at this point, these are called as bricks. These are individual bricks. Okay, they have a specific value that has been set. So only when that particular value is achieved, this brick gets created. If not, the brick never gets created. And that is the beauty of Renko charts. Let us try and understand how. Okay. Let's say I have set this value at 10 rupees. Okay. So every time the stock price goes up by 10 rupees, a new candle is formed. If it goes by 20 rupees, the second candle is formed, and so on and so forth. If the candle or the brick, as we can call it here, if it goes down by 10 rupees, then a red candle is formed. So if you see here, this do not take into account how much time it takes for this bricks to be created, but only takes into consideration the value. This 10 rupees, it can take 1 minute or 1 day or 5 days, doesn't matter. Only when that 10 rupees is achieved, that is when this new brick will be formed. And that is how these Renko blocks are generated. So with each green brick, I know that there is a set value that the price has achieved and through which the market is going up. To understand this in this chart, so here the value is 50. So for every brick to form, the market has to go up by 50 points. Okay, so from here to here, the market has gone up X number of bricks into 50. So that will give us the total trend that the market has journeyed. Okay. Similarly, For every red block to form, the market has to come down by 50 points. The beauty of these Renko charts is that you'll be able to clearly see the action of the price without any chaos as to when it is going up and when it is going down. And this is what makes this a killer in terms of trading. This will give us that insight as to how the price is behaving and thereby take our trades and go through the entire trend. Okay, this cuts the clutter and gives us a powerful tool that we can leverage in our trading. Now that we have understood what Renko charts are and how are they formed, in the next part we'll be looking at how these are different from candlesticks and Heikin-Ashi chart. We'll do a chart to chart comparison and then we will have our key takeaways. Stay tuned because there is going to be a lot of things that we'll be covering and also there is a surprise for you at the end. Okay, let's meet in part 2.